In this video, I'm going to show you how to take advantage of a dip in the market to make maximum profit trading futures. I will be trading perpetual futures contracts on KUCOIN, and watch to the end to see how much I made in one day trading the dip. First, however, a word of caution. Trading futures is not for inexperienced traders. If you are new to trading and know little or nothing about technical analysis, then I would strongly suggest you watch this playlist which I have put together to better help you on your trading journey. If you're still watching at this point, then that means you believe you have what it takes to be a successful futures trader. If you haven't already done so, do please take a moment to subscribe to my channel, so you can get similar content as soon as I upload them to help you on your trading journey. I would also appreciate a like. Now, to be successful as a futures trader, you need to understand that you could lose all your capital. You must be able to identify both bearish and bullish candlestick patterns. You must be willing to wait for that perfect setup. So in this instance, patience is definitely a virtue that is necessary to be a successful futures trader. You must be quick and willing to take your losses. Only initiate entries with small lot sizes. Now this you can always increase as your position works in your favor. And remember, always take profit frequently. Now the market is recovering from what looks like a temporary crash. Bitcoin and many altcoins lost up to 30% of their value. But as of right now, all are presenting green and recovering nicely. So the downtrend over the last few days has halted. We've identified the bottom of the market. Now there's a reversal, as we can see from the charts, and looking on the higher time frame, I've been able to identify an upward trend. Now I think this will work with most of the coins, but I happen to pick on Matic because I do hold Matic and I have been trading it of recent. So I enter in at $1.90. I'm using a 7x margin and end up exiting this trade at $2.06 with a profit of $91.48. The duration of this trade was about 30 minutes. And following is the technical analysis that I use to back up this trade. At this point, I entered into this position because this green candlestick had finally broken above the resistance that was created by the previous 3 candlesticks just before it. So at the break above the resistance, I entered into the trade. Now, do bear in mind that I've already said that the trend of the market has already changed and we've already hit the bottom, as can be seen from this 30-minute chart. We've hit the bottom, the trend has reversed and we're now in an uptrend. And I waited to confirm that the trend had actually reversed by not entering into a long position until I had a golden cross of the 9-day crossing over the 20-day. So the blue crossing over the yellow moving average. So with the crossover of the EMAs along with break of resistance from the previous 3 candlesticks, coupled with the fact that I had already confirmed that the trend of the market had changed from being bearish to bullish, I now felt a little comfortable opening a long position. So all I entered into this trade with was about $155, but with the 7x margin, it essentially loans me 7 times the amount that I want to enter the trade with. So 7 times of $155 gives us $1,085. So dividing $1,085 by the price of Matic, which is $1.90, gives me 570 Matic, which is what I enter into this trade with. Now, in every trade you enter into, it's always important to take particular note of the liquidation price. This is the price at which all your position will be liquidated. It's the point of no return, and it's the point at which you lose all your money. So you always want to set your stop price above your liquidation price in your long positions or below your liquidation price in your short position. There are different trading styles for different market conditions. Firstly, it's almost impossible to make any profit in a fluctuating market. So the main thing to look out for is that there is a definite and obvious trend. And in this case, we had a situation where the market was coming out of a dip, and at the point of the reversal, there was an obvious uptrend, as can be seen by all these green candles. The second thing to note is I try to keep my leverage at about 7x or less. There will be situations where I will use higher leverages, but generally speaking, I try to keep it to 7 and under. The higher the leverage, the greater is the chance that you will be liquidated. So it's important to manage your risk by managing your leverage. Lastly, be quick to admit defeat if the market goes against you. The quicker you are to accept that the market is not working in your favor, then the less will be your losses. Now you can see that my losses are minimal because I'm just quick to take my losses. Sometimes I'll have days where I'll have 4 or 5 plays and I'll have to stop out all the times because the market is just not working in my favor. At such times, after I've gone up to 4 attempts, then I just call it a day. Otherwise, what happens is if you keep on fighting the market, you will increase your chance of losing most, if not all, of your capital. Well, that's all, folks. I hope you've learned something from this video. And if you have, the only thing I ask is that you hit that like button, comment below, because I do use your comments to better inform me of what other content to create. Share with your friends and family. Make sure you subscribe to my channel, but most importantly, don't forget to hit that notification bell. And I'll meet you in the next video.